Dear students, we are ready to finish our discussion of taxes, everybody's favorite subject to hate, with some information sources and tools and auditing. And then we'll take a look at some tax reduction, tax avoidance strategies that are not as powerful as they used to be, thanks to the Tax Act of 2017. So let's get started on slide 33. The IRS has several methods of assistance. There's their automated phone line where you can download lots of goodies and use their website. And the phone hotline is way overloaded. My understanding is that 1 in 4 or maybe 1 in 10 people just give up and don't wait. There's a walk-in service at the IRS office. Make an appointment. They used to have an email service. I think it's gone, but it was very good. I used it. I thought it was excellent. And the IRS website is actually pretty good. Could be better, but it's not bad. And part of your assignment is to check it out. And I know you can use a search engine such as Google, but I'd rather you use the irs.gov website because it's very typical to find data that is incorrect. And even the IRS sometimes has incorrect information on their website. A very celebrated case, a gentleman used the information from the IRS website, which was wrong. And when they went after him, he said, "But I used the information you gave me." And so he sued the IRS and lost. The judge said, "Sorry, just because they made a mistake doesn't mean you can break the law." Yeah, wonderful. There's a publication called J.K. Lasser's Your Income Tax, which is pretty thorough and very popular. And there's a future for you possibly in tax preparation. We have a wonderful class, Accounting 109, and we talked about the VITA, whatever it is, volunteer income tax assistant internship, where you get college credit and you get to get a certificate saying you are a tax preparer. You learn their system, and they ask you to volunteer 40 hours between the beginning of the tax season until April 15th. And of course, the Infernal Net is an inexhaustible supply of stuff that is just plain wrong and sometimes leading you down the primrose path of destruction by telling you that taxes are voluntary, taxes are unconstitutional. You don't have to pay your taxes. Slide 34. Now, more and more people are using these tax preparation softwares. The 800-pound gorilla is TurboTax, but there are others, H&R Block at Home, Tax Act, TaxSlayer, and they've been gaining market share. And Intuit, which is the company that owns TurboTax, actually Intuit's based up in the Bay Area, but TurboTax is actually based here. The people who do the software, do the system, is actually based here. It started here and then was purchased by Intuit. They got in a lot of trouble because they promised the IRS they would make a free option for people who don't make a whole lot of money. And they did, but they buried it. They wouldn't let anybody find it. So they got in a lot of hot water. And so now they're pushing it. But really, folks, there's a lot of people, myself included, who say, look, there should be a centralized system for you to do your taxes that should be publicly run by the government. I mean, you want people to pay the taxes. You should make it easy as possible, in my humble opinion, but that's never going to happen because private companies have a lot of sway over what was it? It was Mark Twain over 100 years ago said, "We have the best Congress money can buy." Anyway, most companies prefer you to use your browser. I still like the system that goes on the local machine. It's up to you. And some of them will let you do it for free until you go to file, and then you have to pay them, or you could print it out and send it in for free. So you decide. I didn't want to use this for many years. I was doing everything by myself using my own spreadsheets. And then one year I decided, I really should check to see if my calculations are doing it right. And it turned out they were. I was pretty pleased. I was fairly pleased with myself. And I was also fairly pleased with TurboTax because it's actually pretty easy to use until you find something that you can't completely understand and takes you down a little rabbit hole and you get completely confused. But then you have to dig yourself out. And I've been able to, generally speaking, and our taxes are a lot more difficult than most people's taxes. So if you have a typical 1040, one of these software packages should do the job. How about a service? Well, there are tax preparers, and you could be one of them. I don't think they have that much more training than I do and than you do. If you want the big gun, you need an enrolled agent or a CPA. But the truth is, folks, the CPAs just turn around and give it to their staff. They don't usually do the work. The enrolled agent, on the other hand, is somebody that's been approved by the IRS, and they are a hired gun. I think, in my humble opinion, they are the most powerful when it comes to taxes. And of course, a tax attorney. How much work help do you need? Well, again, if you have a simple return, you can do it yourself. And don't forget, volunteer income tax assistant. I think it's 60,000 or something like that. If you make less than that. Hey, guess what? If your professional tax preparer makes a mistake, who's responsible? Yeah, you are. So for this reason, it is important to at least understand the forms you're signing and check that the numbers are reasonable. There used to be very unscrupulous people who would say to gullible individuals, how much taxes did you pay last year? $5,000. How would you like to pay $500 this year? Love it. Let me do your taxes. Here, sign here. What is it? Don't look at it, just sign. And then they would disappear, leaving the gullible, unfortunate individual to face the consequences. So now the IRS has a registration and testing process, and if you do taxes for somebody else, you have to say who you are. You have to identify yourself, and you have to be registered, and that's what you will get if you volunteer for the VITA program here at Southwestern Community College. Not only will you get college credit, you'll get experience, and you'll get that certificate saying you can prepare taxes. Very, very cool. Slide 36. All right, tax audits. Look, just relax. My understanding from people who are in the know is that very few, way under 1%, are audited just because they don't have the resources. And that's one of the things they asked the Congress to do. And of course, they've been getting some flack after it was approved. And now the Republicans are trying to take the money away, saying they don't need it. They should get rid of the IRS. Well, good luck with that. Most, my understanding, are because of arithmetic errors. Of course, if you claim large or unusual deductions, you're more likely to be audited. And if you are audited, there are three types of audits. There's the correspondence audit. That's why you need to know, they need to know what your address is. If you change, move, you got to let them know, because they're going to send you a letter. Might be 6 months, 9 months, 12, or more months after you do your return saying, official business only, IRS. And it's very difficult to read their letters. But this is what we got. We got this letter saying, you goofed, you owe us this much. And I said, wait a minute, I don't. And it was true. Somebody else goofed. It wasn't me. It wasn't the IRS. It was somebody else sent something with my name and the Social Security on it with the wrong information, much wrong. And so I went to them, got the copy, the right copy, sent the IRS the copy with a letter explaining what happened, and they sent me back a letter saying, oh, thank you, it has been resolved. The office audit, it takes place at the IRS office. They're going to ask you to come in and bring this, that, and the other thing, and you bring this, that, and the other thing, and you say, yeah, good morning, sir, good morning, madam, thank you very much, goodbye, sir. You don't say anything. If they ask you any questions, you go, oh, I don't know. Because they think maybe something's a little hinky if they're calling you in. If you get called for a field audit, that means they smell smoke. They think you've been trying to pull one over on them, and they're going to send their bloodhounds. The IRS agent visits your home, your business, or your accountant's office. You want to avoid this type of audit at all costs, and if you are audited, that's when you call an enrolled agent. That's when you call the tax attorney or maybe a CPA, and you don't even have to show up for the meeting. They send you. The IRS sends the agent to the enrolled agent, to the tax attorney, and this is for people who really do have very complicated returns. I mean, if I ever get audited, field audit, I'm just going to roll up in a ball and start crying. But I'm then going to have to pay the enrolled agent $200 an hour to help me because I understand my taxes, but maybe I screwed up somewhere. I don't know. And I talk to ex-IRS agents who say, no, once it gets past the simple, the one we just talked about, the 10 W-2 form, the 1040 Schedule A, and maybe a Schedule 1 for IRA deductions or student loan interest, something like that. Once it gets past that and it gets into businesses or rental properties or other types of farm, then it can get real scary. And the one IRS agent said, look, no return is correct. We know this. We know that the people at the IRS screw up. They make mistakes. I knew somebody very intimately for many years, in fact, almost all my life until she passed away, my mother, who worked at the IRS. And she would say, nobody knows what they're doing. We're just completely in the dark sometimes. We ask questions and people just don't know. And the people who do know are so busy that you're not allowed to bug them. I wish I would have saved it. There was a wonderful 4-panel cartoon that came out at tax time. It showed 4 panels. The first one was January 15th, and this guy in his home is just throwing papers around going, ah, throwing papers up in the air. And then February 15th, he's sort of putting things, in one place and putting things in the other place, and he's kind of getting a handle on it. And March 15th, he's putting the last touches on it. April 15th, he drops the tax return through the door, and he doesn't see inside, but you see inside the office, and it's an IRS agent who's throwing papers up in the air like January 15th. Ah! Yeah. You have audit rights, folks. They can't just come tomorrow. They have to give you time to prepare the audit, and you want a professional. You don't want to do this because these people are their bloodhounds, and they smell smoke. They think you've been trying to hide income or too many, or you're over padding your deductions or whatever. So get the guns out to help you. Get the hired guns to help you. All right. So there are 2 time-honored ways to pay fewer dollars in taxes: tax evasion and tax avoidance. Which one do you think is legal? Right. Yeah, right. Tax evasion is illegally not paying all the taxes you owe, not reporting all your income, or hiding income, or padding your expenses, or coming up with phony deductions, like the people who promised you that your taxes would go from $5,000 down to $500. The other way, which is legitimate, is tax avoidance, where you use methods to reduce your tax obligation to your fair share, but no more. You don't have to pay more than you need to legally, right? And if it's a legitimate deduction, yeah, claim it. The worst that can happen is they'll say, no, it's not legitimate, and then they make you pay it and maybe pay a little penalty in taxes, interest. But still, as long as it was a good faith effort. Because there are people who are cheating the system, folks. Americans avoid about, and this number varies depending who you talk to, $150 billion in taxes annually by hiding money in offshore accounts. One of them ran for president in 2012 and didn't win. Yeah, so let's take a look at some legitimate tax planning strategies to avoid paying more taxes. And there are these financial instruments called tax-deferred annuities. They have very high fees. They're insurance products. I'm an insurance agent, and I'll tell you true things about insurance products. They're typically not very good, except for people who have so much money that, yeah, go ahead, put money in a tax-deferred annuity. But for the vast majority of us working grunts, nah. Treasury savings bonds, you can avoid state taxes and Treasury taxes if you use them for higher education. Yawn. They're not that exciting. Now, tax-deferred retirements. Yes, we're going to discuss these throughout the semester, but at the end of the semester, 401ks, 403bs. What stupid names? Well, they're codes. They're sections of the Internal Revenue Code that created these employer-sponsored retirement plans, which are actually very cool. Traditional IRA, Roth is better. Educational IRA, 529 plans, Roth is better, especially for us working grunts. For people who have a lot of money and they are pretty sure that their child is not going to qualify for financial aid, yeah, you want to look at a 529 plan because they can be very profitable for you. But for most of us, fund the Roth IRA, and we'll talk about that later. Why? I'll talk about it right now. If you use one of these 529 plans, you then can't get to take advantage of the tax credits, and your financial aid is reduced by whatever's in the 529 plan. So yeah, they're for very wealthy people who are not going to get any financial aid. The KEO, the SEP, the Simple IRA, if you're self-employed, they're basically like a traditional IRA. And we'll discuss these in detail when we get to retirement planning because they are very cool. Everybody should have a Roth IRA. We're not allowed to say that, by the way. We're not supposed to say everyone should have this. But you know what? Everyone should have a Roth IRA. Let them come after me. Long-term capital gains, right. And dividends now are taxed at a lower rate than income. And this has been very, very fortuitous. Very happy, wealthy people have been able to take advantage of this long-term capital gain it's not exemption, it's just a lower tax rate. Now, slide 39. Owning a home was, notice was, one of the best tax shelters because you can deduct the mortgage, loan interest, and property taxes when you itemize. This reduces your taxable income. After the 2017 tax cuts, fewer people could take advantage of this strategy. Why? For various reasons. They upped the standard deduction while taking away the personal exemptions, which is great for people who don't have a home, but for people who did have a home, it meant fewer of their mortgage interest dollars were going to help them with their deductions. You used to be able to use a home equity line of credit to buy a car or consolidate debt. No more. That's been eliminated. You can use tax-exempt investments such as municipal bonds, but again, these are normally very useful for people who have high income. For us working grunts, not too much. Not that I'm trying to be a downer on municipal bonds. We all need municipal bonds. How do you think we built that stadium? We didn't have a bake sale, folks. We had to issue municipal bonds, which are a fancy word for a mortgage. We had to take out a mortgage to pay to build the stadium, and then all the other buildings that are being destroyed and destroyed and then rebuilt. The beautiful old Mayan-inspired buildings are being replaced by ugly, Onion Award winning, that's the architectural award for a building that's stinky. You either get an orchid, which means your building is beautiful from the architects, or you get an onion, and we've already got two onions, the Math Science Building and the Performing Arts Center. Anyway, the Math Science Building, the first time I looked at it, it looks like a prison. There's bars on the windows. And the one architect said, no, they're curtains. I said, no, they're bars. I taught at Donovan Prison. Donovan Prison buildings look better than that building. And that was before they got the onion. So there. And I said, you can't fire me. I'm already retired. And then one of the best ways to avoid taxes is to start a business. Now, not a hobby, but a real business that will generate income and then allow you to deduct certain things that you normally wouldn't deduct if you were just an employee. So let's get started on the home interest deduction, the home deduction, because that's the big one. The real estate agents are jumping up and down saying, of course you need a home. You're going to get that deduction. Well, guess what? It doesn't work for everybody. Let's say our adjusted gross income is $60,000. Remember A. King back? Now he was head of household. We're going to do a single person and a married couple. The standard deduction for single people is $12,950. The standard deduction for a married couple is $25,900. So the taxable income at the bottom of page number 1 of Form 1040, line 15, for the single person is $47,050. For the married couple, it's $34,100. So we go into the tax table, and the single person is paying $500 a month, basically $500 a month in taxes. The married couple is paying about $300 a month in taxes. So let's buy a house at the lower end, well, not even anymore, of the home buying process. And here's what we get. And this look familiar because this is A. King back Schedule A. $1,000 of income tax. There's the real estate property tax, part of what we get to take advantage when we own a home. the property tax for our home, for our house, our car, sorry, the vehicle license fee from the DMV. And then here it is. You have a mortgage of $400,000 at 4%. Now mortgages have shot up. So, so this was, something we did a couple of years ago before mortgages shot up and housing prices skyrocketed. So good old A. King bought his condo quite some time ago and still only owes $405,000 on it. And we gave $700 to charity. So that's an itemized deduction of $22,000. And notice that the SALT, state and local taxes, are less than the $10,000, right? Okay, so let's continue on to slide number 42, where we see what happens if we have a home deduction. So if we take the $22,000 that A. King was able to, and the single person here and the married couple, this reduces our taxable income to $38,000. Huh? That's less for the single person, 47, but what was the taxable income for the married couple? Because they've got a standard deduction larger than $22,000, it doesn't make sense for them to itemize. The itemized deductions for the married couple are less than the $25,900 standard deduction. They would not get to take advantage of their home mortgage deduction. It wouldn't make sense. They pay more in taxes. So the savings are negative for the married couple. The savings for the single person savings are $1,600, so about $150 a month, $140 a month. But the married couple would not make sense. It wouldn't make sense for them to itemize. For married couples buying at the lower end of the housing market, or they already have a mortgage, the Republican tax cuts removed any tax savings. You are better taking the standard deduction. You're better off taking the standard deduction. Now, don't expect the real estate agents to tell you the truth. They're going to jump up and down and tell you how it's great to have a home because of the tax deduction. But for many people now, it just isn't true. Yeah. But what happens once your salary gets to be close to $100,000? We'll start with 90. How about it? Well, the single person is paying a lot in taxes. They only get the standard deduction without the home, $12,950. But the taxable income now is $77,050, and they're paying over $1,000 a month in taxes. The married couple has the standard deduction of $29,500, so their taxable income is down to $64,100, which means they're paying a little less than $600, about $600 a month. Ugh. So how can we reduce it? The answer, of course, is to get a home. So they buy a house, and they bought it a while ago and got a 4% loan, and they got it before 2008, because now you're only allowed to deduct mortgage interest on the first $250,000. Plus, the Republicans limited the state and local taxes, the SALT, to $10,000. So notice these people are just underneath that. $2,000 plus $7,600 plus the DMV property tax, $10,000. They couldn't do anything else. If they had paid more property taxes or more income taxes, they would not be allowed to take advantage of it. They're only allowed to take advantage of the first $10,000, and even if they're married, you don't double it. So the marriage penalty exists. And now they have a loan of 4% on $810,000, so that's $32,400. They're feeding the dragon for their mortgage payment every month, and they gave more to charity because they have more. So they've totaled their itemized deductions to $44,000. So now we're going to see a significant reduction, especially for the single person. $90,000 of gross income minus the $44,000 itemized deductions with the big mortgage payment gives us $46,000 of taxable income, and we have a little under $500 a month of taxes from $1,000. So we've halved our taxes. The married couple has about a little over $2,000, but still they don't, because of the standard deduction is so high. It's not as big. If we jump back there, what was it? 7,000. What it was? 7,200. So yeah, a little. They're saving about $180 a month in taxes. You see, the home mortgage interest deduction is not as powerful as it used to be because the standard deduction has gone up, plus they've capped it on $750,000, and they've also capped the real estate taxes along with the state income tax. But they wanted to hit California hard. They wanted to hit the urban areas in the Northeast and Chicago, Seattle, and they did. Good for them. Slide number 47. So the tax savings for the single person are substantial, over $500 a month, like $190, $180. Once your income reaches the middle to upper middle class level, a home is normally a very good tax shelter. However, be mindful of the limits imposed by the new Republican tax cuts. The Republicans wanted to punish the high tax states such as California and New York for not voting Republican. In 2018, the voters in high tax states proceeded to decimate what few Republicans were left, further dividing our country. Orange County, for example, as I already mentioned to you, lost all of its Republican House representatives in 2018. And this was the bastion of conservatism for decades. People don't like it when you hit them in the pocketbook. That's an old saying. They vote their pocketbooks. And in this case, they did. But remember, the Democrats are communists, socialists. They love the woke individuals and the gay people and the grooming children to be. I hate it, folks. I hate it. I hate this national identity politics, and we're yelling and screaming at one another, and it's going to end badly. We'll see. But that's go talk to your political science professor, right? This is financial planning. Slide 48. Remember that $299, whatever it was, stereo item, electronic item that you couldn't live without, that cost us over $500? Well, if it's a legitimate business expense, then that same $299 just costs us $314. You still have to pay the state sales tax unless you plan to resell it, but you get to deduct the state sales tax as a business expense. Now, when would a stereo be a legitimate business expense? Right? Well, maybe you have a storefront and you need a stereo for the music in the storefront, or you have a waiting room or a doctor's office or whatever. Or maybe you're a DJ. Yeah, and you need this equipment for your business. Right. But it has to be a legitimate business. After 2, 3, 4 years, if you're not starting to make money, the IRS is going to come back and say, you know what, this is not a business. This is a hobby. And they're going to disallow. You have to go back and do your taxes over again for those 3 years and get rid of the deductions that were negative, that reduced your income because the business wasn't turning any money. I have a little story to tell. How much time? It shouldn't take too long. I told you I have been doing taxes for many decades because I just want to be able to understand how they do them. Plus, in our tax situation, the actual putting the data into the machine or putting it in the spreadsheet is easy. It's all the organizing and getting all the receipts and all that. That's the tough part. So it became very quickly known that Frank's doing taxes for the family. We started by trading with my sister-in-law who would watch our son when he was very young. And my niece, her daughter, had a partnership. They had a Backyard Productions, which has now morphed into Backyard Renaissance, which is a theater production company. And at first, they were doing everything very, very cheaply, right? They were doing everything with no sets or minimal sets, just wearing costumes, basically wearing their clothes that they wore, just clothes they had on the shelf that they wore day to day. But then they started to get some critical acclaim, and of course the critics are yelling at them for not being more professional. So they started to spend a lot more money on the productions, which meant they went from making money for a few years to losing money for a few years. And it didn't look like they were ever going to get back to profitability. And I said to my niece, I don't really, I'm not a professional, I'm just doing this. I don't know what's going to happen. You're supposed to be able to make money in your business or they can disallow the business. And she said, well, what should we do? I said, let me contact the IRS and see what I can do. So I called and sent some emails. It took me a while to find the right person, and everyone was very pleasant, but they just said, I don't know. They said, maybe you ought to talk to this guy. Maybe you ought to talk to this guy. Finally, I talked to somebody who, I don't know where he was, but he seemed to know what he was talking about. And he says, well, what kind of business is it? I said, it's a theater production company. And he roared with laughter. He thought that was the funniest thing. You go right ahead and lose as much money as you want. No theater makes money. I thought, yeah, that's why they're all nonprofits and are begging for donations because they're a charity, because the tickets don't begin to cover the cost of the theater production. So I went back to her and I said, this is what the guy said. He said, don't worry. He said, go right ahead and keep losing money. And then she said, I don't want to do I don't want to keep losing money. And so they morphed, and now they're a different entity, and they are a nonprofit, and they accept donations from people who need, tax deductions for charity. It's a funny world, folks. It's a funny world. Everybody's just trying to get through the day. Slide 48. Donate your car. Get a tax break. An all too familiar spiel we hear from charities these days is you can donate your car and get a $2,500 tax bracket. Well, if you're in the 22% bracket, that's worth $550. Of course, you might only get $50 in cash if you ask the recycling yard to come and get it. Not a bad deal, eh? Well, no more. The charity must now immediately sell the car, tell you the actual amount they received for the car. So the IRS said, you're padding, the thing isn't worth $2,500. So, also, if you don't itemize deductions using Schedule A and instead take the standard deduction, then you can't take advantage of the deduction anyway. And so many people were burnt by this tactic. They believed that they were going to get a tax deduction, and so they got their receipt and they were all excited, and they told their tax preparer, and the tax preparer says, well, do you own a home? Do you have medical expenses? Do you have other gifts to charity? Well, I gave my church $100. They said, well, the standard deduction is better for you. You don't get to take advantage of the tax deduction for the car. And then they would get mad, and they go back to Father Joe's or whatever, their church or KPBS or Southwestern Community College Foundation, other nonprofits, and say, you told me I was going to be able to get a standard tax deduction. And they said, we told you may be able to get a tax deduction. Consult your tax professional. So I think most people have figured this out. I hope they have before they give away that car that they might have been able to sell for maybe $500 or $1,000 and actually wind up with nothing. So the bottom line on slide 50, death and taxes. Pay your taxes, quit complaining, or go right ahead, keep complaining. But it just drives me up a wall when I see people complain, and then when that aircraft carrier floats by, they put their hand on their heart and say, God bless America. Well, you know what? God isn't paying the taxes. We are. Ben was wrong, though. He should have said the only thing certain in life was death, taxes, and tax law changes. Because they keep changing the tax law, always making it more simpler, as they say on the television, but the reality is they keep making it more and more complex. Look, if we want real tax reform, all we really have to do is make our senators and representatives do their own tax returns. Because every year, they don't have to do them. Somebody from the General Accounting Office, I think, comes down to Capitol Hill and does the taxes for them. So what do they care if it's more complex and more complex? Yeah. Don't hold your breath. Instead, become a CPA, tax preparer, whatever. You will be guaranteed lifetime employment, folks. The first step is to volunteer with the VITA program here at Southwestern next year. Talk to Professor Maria Martinez Sanabria, because she's our liaison. And then there's another one, Monica. I can't remember her last name. She's been doing it for years. She's awesome. And so get involved, because, it's really not as hard as we make it out to be, usually. And then every once in a while you run into something that's very incredibly hard, and that's when you need to go or become a CPA or an enrolled agent, and you will be the expert, and you will have perpetual employment. Thank you so much for being in our class. Now go over the tax exercise 1. Go over the tax exercise 2. Look at the stars, look at the asterisks, because that's where you put the numbers. And then do the assignment, because you can do it. Just don't freak out. Take your time, print them out, or do it online and on the computer, and you will be awesome. We're so proud of you. Now, our next chapter, we will discuss banking and savings and checking accounts and credit unions. And so stick with us, dear students. We're so proud of you. Thank you so much for being in our class.